In this video, I answer the biggest questions about investing and give you the tools to start investing right now. Questions like why you should invest and how much do you need and everything you need to know in order to start getting invested right now. Hey, what's going on, everyone? My name is Mal Livodi with financiallypresent.com, your one-stop shop for financial and investment education. And in this video, we are going to break it all down. And we have all of these questions we're going to go through one by one, and let's get started. So why is this so important to invest? Well, if I had to give you a one-word answer, it'd be inflation. All right, that's the idea that what we have and buy now will be much more expensive in the future. Okay, this is the same reason why in 1980, the average price of a loaf of bread was 50 cents, but now in 2022, the price is about $2.50 on average. Okay, and this is also the same reason why a dollar back in 1992 would need to be $2 today in 2022 in order to buy the same exact thing. The value of the dollars you currently own are not going to hold over time. You have to increase your purchasing power or your earning power in order to be able to afford the same exact things. And this is why when we talk about things like the consumer price index and inflation, it's really just talking about how the prices of things go up over time. You can save all the money you want, but if it is not growing at a rate faster than inflation, then you're fighting a losing battle. And you have to give your money a fighting chance in this battle. Another reason to invest is that you are only one person. You are one fixed unit. You are one person in one place. You can do maybe a few things, not efficiently, and that's you and me. So in order to give yourself a fighting chance, you need to put your money to work. When you have your money invested for you, your money becomes your employee. Because when you consider us as human beings, we have to sleep, we have to take lunch breaks, we have to take bathroom breaks, we have to rest. We can't work all the time and we're subject to burnout. So in order to increase your purchasing power or your earning power, you need to do more than you would actually be able to do. You don't only want to trade your time for your money. You need something else working to your advantage, and investing is one of the greatest ways to do that. So what are shares? Shares are essentially a portion of a company. It's non-tangible. It's not a physical piece that you can hold, although in the past there used to be stock certificates and things like that. A share of a company represents equity, a piece of that company that you can actually trade or you can keep, and the value of that company will fluctuate. When you own part of a company, you are a partial or minority owner of that company. So you have some decision-making power, especially if there's something called voting rights attached to those shares. And that's very normal for common stock. When you own shares, you can vote. And even with some shares, you are entitled to a portion of the profits. We call those dividends, where the company values you as a shareholder and they decide to give you additional money. I would think of it as a loyalty program where they encourage you to keep holding the shares. They like to do this because who gets paid in shares? The executives of the companies, the owners, and some of the most valuable employees. They are paid in shares. And what better way to keep the value of the shares high or maintained by encouraging people to keep the shares and to keep them on a regular basis year after year after year. How do you make money in the stock market? Well, it's similar to when you hold any type of asset. If you have something that's popular or valuable to anyone, they may be willing to pay you money for what you own, okay? And shares of a company, a highly valued company, is going to be desired by other people, okay? There's a specific value and it's determined by how many people want to buy versus how many people want to sell. Think about things like artwork or a house or any type of asset that people may or may not trade back and forth. There is a perceived value that it's going to maintain. And when it's no longer popular, that value may go down. Collector's items are a great example. You can think of things like back in the day, there were Pogs or there were bottle caps that people would trade back and forth. But something that stood the test of time is trading cards, athlete trading cards. There's even been dolls or Beanie Babies, if you're old enough like me, where they were traded for their specific value. And when they lost popularity, the values of these items may fluctuate, they might go down. But ultimately, when you own shares of a company, the value is all generated by what the market, the people who are interested in that item, dictate. So for an item that you buy as it's trending and becoming more and more popular, if you sell it, you will get the difference from what you paid versus what you sold it at. And now you have made money, you've made profits. And that is the difference. Now, how do you buy a share? Okay, so you can't just go up to a company and say, hey, I want a share of your company. You have to go through a broker. And a broker like a TD Ameritrade, Charles Schwab, Fidelity, E-Trade, Vanguard, these are all great reputable brokerage firms that you'd be able to use. And ultimately, they are licensed, they have the associates, and they have the technology where you just log in, you will create an account, log in, deposit funds, and then from there you'd be able to research companies that you're interested in or funds that you're interested in. And then you could select however much you want to spend or buy a specific amount of shares. And if you want to be very specific about your order, you can detail how much you want to pay per share or just buy it right immediately. There are different order types, and I would break that down in a different video. But ultimately, you could buy a stock quicker than you can buy an item on Amazon.com. It's extremely easy. Once you own a share of a company, you can sell it immediately. I mean, literally within seconds, you can buy and sell. Or you can hold it for years and years and years. There are people who've owned shares of a company for decades, assuming the company is still around. It is that easy. How do I know which shares to buy? Okay, so this gets a little bit tricky, okay, because there's no one right way. You could research a stock for years and years and years, and then finally decide to buy and be just as right as someone who flipped through the pages of a newsletter and decided they wanted to buy it right then and there. There's even been studies where monkeys could randomly throw darts and still outperform experts and even indexes. And we'll explain that in a second. But ultimately, it can be extremely hard to figure out if there's one right way. There is no one right way. But ultimately, what you've found is that no matter what, everyone has decided that it is extremely, extremely critical to diversify. It's not enough to be right about one investment. It's more important to be right about many investments, because the way this economy works is there's no one industry that's always doing well all the time. It fluctuates. This market is always moving and ever changing. And to only be invested in one company or one stock, you'd be selling yourself short. It can be a little bit complicated or tricky as far as the right stock. All right, so we talked about stocks, but let's talk about indexes. What's an index fund? So in order to understand an index fund, we have to talk about an index. And an index is a standardized group of investments or a measured collection that represents something, okay? And in the stock market, the most popular indexes we can talk about are the Dow Jones Industrial Average, the NASDAQ, and the S&P 500. So these are all collections of stocks that give us a representation of the market, and they are sold in funds. So an example would be the S&P 500 is a representation of slightly more than 500 of the largest companies in the world. It's known as the best indicator of the market as we know it. And I could decide to buy each of the 500 some odd shares individually to the specific balance of the S&P 500 index, Or I can find someone who is professionally managing an index fund and buy a portion from them. It would be like if I were to build a 500 layer cake. I'd have to bake all of those individual slices and make sure they're the right thickness in order to represent the S&P 500. It would take a long time for me to do that. Why not go to a baker who already has a 500 layer cake, and then I'll cut the slice that I want and pay them accordingly. That's how an index fund works. Ultimately, someone else is doing the work and you're able to invest and get the right representation. Now, how do you get started? It's extremely easy. You go to any one of the brokerage firms I mentioned before, like a Charles Schwab, TD Ameritrade, Fidelity, and so on, and you have to have basic information with you: your name, your date of birth, your social security number, your address, and employer information is the minimum information you need in order to open up an account. And I would even take it a step further and say you need to have some beneficiary information so that if something happens to you, your investments will go to your loved ones. At minimum, I feel like everyone needs at least 3 accounts. It's going to be your individual account or joint account if you're married, your traditional IRA, and then a Roth IRA. Those are 3 nearly all-encompassing accounts for various reasons and various tax situations, which will need to be covered in a different video. But most people have about 2 or 3 accounts at minimum when you start to get into investing. It takes about 5 or so minutes to open up a brokerage account, assuming you have all of the information readily available. Just make sure you're accurately putting the information in. There's usually an identity check and you would have an account number within a few minutes. If you have any trouble with this, check out some of my other videos regarding the different styles of accounts you can open up at any one of the major brokerage firms. How much do you need to start investing? Well, technically 0. Right? You don't need anything. You can open up any account and have a 0 balance, and generally they won't close the account for you in most reputable brokerage firms. So you don't need anything to get started, but ultimately you open the account because you want to get invested. So you would want to make sure that you have a substantial amount that you can regularly contribute, or start small. There's nothing stopping you from putting $10 every week or $100 every week. But you have to keep in mind that in order to actually purchase something and invest, you want to have some decent money in there. Shares of individual stock can range from $10 to $1,000 per share. It really depends on what you're going to buy. But ultimately, you have to have the funds in there and readily available in order to make the purchase. If you're depositing funds into the account on a regular basis, great. I think that's perfect. Even if you're not ready to make the buy decision yet, having the funds parked in an investment account puts you in a greater position to make a good decision and invest to build wealth. What are the fees included when it comes to investing? Well, they're almost negligible. 7 or 10 years ago, most brokerage firms were charging, it could have been $7 per trade up to $10 per trade, or even more, especially if someone had to physically do the trade for you. But if you're doing it online, nowadays, the commissions are essentially 0 to buy. You would see a fractional cost if you're selling a large amount of shares or doing a large trade, but ultimately, the fees are very low. When it comes to index funds, like mutual funds or exchange traded funds, you'll probably see an expense ratio. This is different from the actual transaction fee. This is more charged on the amount that you have invested in that fund. To find out more about the fees that you're actually going to be charged, you do have to stick to a specific broker and look through their commissions and fees list. Or you can look online. I'll provide some links below where you can compare some of the costs of these big brokerage firms. But ultimately, the differences are going to be pretty minor, I would say. The only time the costs get significantly larger is if someone is actively managing your money for you. And that's where the costs are slightly different. But if you're doing this on your own, it can be very low cost. All right, so there you have it. What's stopping you from opening up an account right now? Take the next 5 minutes, open up an account. But before you do that, I want you to hit that like button, subscribe if you're new to the page, and turn on notifications so that you don't miss out on future content. And until next time, stay present.